We're looking at the capital side of the equation now. So we're trying to get insights into the people that are actually providing the capital for these deals, and the people that more than the capital are also providing the support along the way. So now we've got the investors. Grab a seat and a mic. So James has kindly offered to moderate a panel with three highly experienced investors, both in this space and outside of this space. And so I'll let James do the honours of the intros and take it from there. And as with the prior panel, we'll have a bit of Q&A time at the end. So bank up your questions. Over to you, James.
Beautiful. Thanks, Pete. My name's James Frank. I am the Chief Executive Partner at Frank Law and Advisory. We are a corporate law and corporate advisory practice in the pure ETA space and SME land. So it's great to be here and, to be honest, great to moderate this panel. I guess in planning the forum this year, Embracing Resilience, we thought it's necessary to hear from investors and how we kind of tackle that challenge that naturally happens in SME lands when something doesn't quite go right. So joining me on the panel is Charlie, his CIO at listed funds manager Hearts and Minds, and a recent SME investor. We've got Alix, who's an SME operator, advisor, and investor with a particular focus around the turnaround space, and Rob, who's a co-founder at Ambit Partners, pure search fund investor, who's invested in over 80 deals, I think, since 2020, we were talking about before. So lots of experience. I guess we've had to, in our pre-discussions, refine the scope of this session because it could go and did go, our pre-discussions, quite a significant breadth and depth. So what we've tried to do is focus on this particular definition of resilience, the capacity to withstand or recover quickly from difficulties, and the time being, medium to long term, being post-acquisition. So just trying to set some parameters. And in designing this particular session, we're going to lead two questions, and then actually we're going to give it the majority of the time to Q&A because we thought that's probably going to be the most helpful for those going through maybe something like this, or at least trying to work out how to position the investors for this. So I'm going to kick it off. First question is essentially the theme of this. So Charlie, what do you think is the role of the investor for the medium and the long term?
Look, it depends, I guess, and maybe just to explain my background, I've had 30 years in listed equities, which is actually very different to investing in a search business. If something goes wrong, you can actually sell your shares, which is often the best thing to do. Not something you always do, but it's a very different environment. I've invested in 3 businesses so far, and I've backed another 4 searches. So this is something I've really grabbed with both hands. So I think it's fascinating. One of the things I like about it actually is that once you invest in a deal, you're all aligned. Whether it's debt, equity, the founder, the entrepreneur, we're all on the same page, and you can't sell. So when things go wrong, and often they will go wrong, it's a question of being available, and I think it's a question of having excellent communication on both sides. And to some extent, as an investor, it's getting out of the way as well. Like if you can't help, then actually don't get involved. If you're not on the board, you're an investor. If you can't help, then actually stay out of the way, I think is an important point.
Alix?
So I'm only usually a minority investor in searches, so I am quite passive. However, I invest in some other founder-led businesses. From my perspective, I have an operational background, having run some significant family businesses. So my role as an investor is to stay quiet in some instances and go with the flow. However, I'm a female. I predominantly only invest in the female searchers in the room. And so the take that I have is I'm supporting them in a slightly different way, which is bringing my experience of being a female in a male-dominated industry, which is this here, no matter what businesses you're buying, and giving some insight on how they can stay resilient when there is duress in the business, when there possibly needs to be some sort of turnaround or debt issues or any of those, any macro shocks. So I'm a little bit more of a supporter and a you can do it side of things, as opposed to talking about the intricacies of what's going on in that space. And I agree that if you don't know anything about it or you can't add value, you should probably keep your mouth shut. Yeah.
Just on that, from and I'm going a little bit off script here, but the investors that maybe are smaller on the cap table, how do they, I guess, educate themselves when they are a minority and don't have the knowledge? Is it go to the investors that maybe do, or how do they, if it's particularly when the credit guys say, "Oh, I just throw some more equity in," right? How do we sort of educate ourselves when it's A, not our area of expertise, and B, we might be significantly small, that we're kind of not the first conversation that maybe a searcher or operator has?
Well, from my perspective, I'm not sure that anything that's going to come over my desk, I probably wouldn't understand. But if you're in a position where you're investing and you don't have the operational experience or the investment background experience, then you yourself should be seeking advice outside of that. If you don't know what the legal documents say or what the impact to your investment is, then you need to educate yourself. Yep.
Rob, going back to the core question, role of the investor in the medium to long term?
Sure. I think maybe a caveat to start, or a proviso, it's like, take everything we say here with a grain of salt, in the sense that we're investors primarily talking about what investors should do well. And the real person to ask is probably the CEO, just because they'd be able to comment more accurately on what's been helpful. So we'll throw out, I think, some fair ideas, but maybe chat to some of the CEOs in the room, of which we've been invested in and worked on boards with, to validate. So I think to build on a theme already, there's a first role that maybe goes without saying, which is, don't be the cause of the difficulty. Right? So there's sort of a first order role of do no harm. And being passive sometimes, or getting out of the way, is part of that. But try not to be a squeaky wheel unnecessarily, and be the cause of why your investee CEO needs to be resilient in the first place. Right? Don't be the problem. But switching more to like actual things you can do. I mean, there's probably a comment to make upstream, actually, that an equity investor can play a really important role in, is that two of the pieces that build the most resilience into the whole journey are the business you buy and the industry that it's in. Sort of taking the people out of it, right? If you think of search as a jockey and a horse, and a track and a trainer, there's sort of the horse and the track part of it first, which during the search, you can have a huge impact on the quality of the asset that's bought, and particularly down to something like revenue quality. If a searcher buys a project-based business that, when you boom, there's lots of projects to do. And then when it busts, and there's very little resilience in that horse, right? So you've baked in bigger problems downstream for the medium term. So taking that work is done, and that you've bought a good business in a good industry, then the people start to matter in terms of resilience. So I think the investor's role, really, I think of it as like an extra experienced and specialized layer of armor that you have in coping with some of these difficulties. And the armor will manifest itself usually across 4 dimensions. So one is capital. A theme of the lender panel just now is sometimes equity injections are required to work through problems. My dad always used to joke that problems you can solve with cash aren't problems, they're just expenses. So there's that element first and foremost. But then I think the other pieces that are maybe non-financial there's skills, knowledge, and experience. So those are skills, or things investors can do to help. Knowledge is lessons they can impart or patterns they can recognize. And then, of course, networks are connections they can make or introductions they can make to help you solve problems. And so when you can help, it's usually flexing one of those four muscles, or of course where we started, which is sometimes flexing nothing at all and just staying out of the way.
Can you, I guess, getting in practical for a moment, in your experience and your journey to date, maybe some practical examples of where you've had to flex and maybe where you haven't?
Do you want to?
Look, I'm still pretty early in the search investing journey, but have had hundreds of disappointing journeys in the listed equity space, some of which you do actually become kind of stuck in if you own a large percentage of a particular business. And I think, when things go wrong, it's very tempting for the leader of that business to try and see beyond it, and to paint a rosier picture for investors initially than actually it is. And that's a great mistake. I think, when things do change, the best thing you can do as a CEO or owner of a business, running a business, is to be upfront, completely transparent. This is what's happened. I think it was mentioned in the previous panel, and this is the action I'm thinking about to remedy it. And basically, you always want to be in a position where you are under promising and over delivering. That sort of counts for most aspects of life, including what time you might be home after a night out. But in a business, I think CEOs that consistently do that and are very transparent with what's going on build incredible trust with investors. But it's very easy to do the opposite when times are tough.
Alix?
So from my experience, not with searches, the last significant investment business we had quite a serious turnaround that needed to be undertaken. And that was a macro shock and a loss of a key customer. And the CEO at the time essentially shoved his head in the sand, probably similar to what you're saying the opposite is supposed to. And it took the investors essentially and the advisors, accountant, lawyer, all of that sort of stuff that you've got around the table to sit down, really analyse what the problem was and sort of help the CEO realise that it wasn't the death knell of the business. We just needed to work out what the problem was, define it, and then work through a solution. And because I work in that turnaround restructuring space a little bit, it's about making sure that we have significant and achievable plan in place, and then that links back to your debt and your lenders. We were going back to them with a proper plan in place that we thought was achievable, and that was essentially how we helped the CEO through. And that built the resilience, going back to what we're talking about, for them to be able to do and work through that again, because it's a business cycle for a reason. It goes up, it goes down, and you are going to continue as operators having these larger macro shocks, either from the economy or loss of key customer, key personnel, those sort of things. And as you cycle through that and work through it, then you are going to see the resilience build.
Rob?
Sure. I think there's to build on Alex's comment about macro shocks. I really think about how you can support through resilience as there's types of resilience that's required, and some are unpredictable, sort of outside macros, big exogenous shocks that are unexpected and uncontrollable. And there's also the day-to-day micro shock of just like the grind of being a founder and being a CEO in the seat. And in that sense, your role as an investor can take on a very different dimension. Like a practical example, Solo Searcher, we backed the first in West Africa years ago. Solo Searcher alone in a new geography, no one really got the experience. He didn't have a very senior leadership team around him, so there was very little just let's talk about the business as partners, to sort of vent, to brainstorm, to celebrate, to commiserate, those things that you would get a little bit more out of like a partner. So that's, that relationship has been, for the first 2 years of the investment, a weekly call just to chat about everything from, a legal action against the seller all the way to like a separated shoulder from a tennis accident. You just sort of talk about everything almost as a friend. And that builds resilience day to day through the grind of being a solo operator, right? And then to Alex's point, like big macro stuff, I think that's where you have to get a little more on the front foot and help with having seen around certain corners, right? So for often the searcher, it's the first time in their career that anything of this nature or magnitudes happened. And when you've seen it happen dozens of times in other places, you can more quickly recognize sort of what the key issues are, the key blind spots, and what a solution looks like to some of the problems. And even if you don't know the exact answer, you can ask helpful questions that allows the CEO to figure it out on their own. And I think there, some examples from our portfolio, there's working through, legal issues. There's calming uptight lenders, of course, never in Australia or with the lenders that were just on the panel. They're incredibly flexible and fair-minded. But in other countries, and then, it's also been like CEO performance issues, and removing searchers and CEOs from the seat and finding their replacement. And that's a part of another reason why search as an investment class is resilient on a certain level too, is that there's that control mechanism as well. And I think it's good to talk about that stuff. Forums like this are often a Kool-Aid mixing and drinking sort of process for search in the ETA asset class. And it's good to know that sometimes it's mixed and it's really sour and bitter and it doesn't work out. And I think anyone contemplating it should appreciate that up front.
We're about to have Q&A, so I'm going to give people 1 minute to think of their question, and I'm going to kick it off. One of my most frustrating things as an investor is you hear nothing and then you hear something. And the something says, we have a problem. Can I have your checkbook? Right? And it's just like, well, that's annoying. Any up, I'll just accept the down. So thinking about communication, how often do you like to hear from your searcher? How often do you like to see them? How often do you like to get a report outside maybe of the formal, annual meetings, etc.? Charlie, start with you.
Yeah, look, I think traditionally you'd probably hear quarterly. I think if a macro exogenous shock happens, you would want to hear about it straight away. And I think the more upfront and better the communication, the more relaxed the investor is. I know that certainly personally. And look, I think, there is, if you have got something to add as an investor, whether it be through your connections or through your background, you should have a curiosity about the business and be somewhat involved. I mean, I go out and see Ryan, who was up here previously, who runs Grimer Recycling in Wetherell Park, probably once or twice a year. And I love it. I'm glad I don't run it. I think Ryan is particularly well suited to that business. I certainly couldn't do it. But spending a couple of days there a year and listening about his strategy, I get a lot of energy from. It's fantastic.
You're out in my hood. Yeah. Alix?
From my perspective, those quarterly updates are very important to send out, and they're very good and keep us all up to date. And again, similar sentiment. If there is a shock or there's a problem, there's a reason why people are on that cap table. Like there's a reason why you've chosen them, and it's usually because of their experience, not just because of their money. So if you are needing things, there's other people in your capital table that have experience that you may not be in contact with all the time, but we can actively probably add some value. But from also my perspective, if the cap table is quite large, there's lots of people wanting time from that CEO, and I don't think that's appropriate either. So essentially, you need to trust in the process as a shareholder that your CEO that you put in place and those reports that are coming out regularly. Then from that perspective, that's your role as an investor at that point.
Rob?
Yeah, I would add, we haven't really made the distinction yet between investor as director versus investor as sort of passive shareholder. There's a big difference on communication and level of disclosure at that layer. So for those new to the space, often a board is formed with a majority of people from the investor group, or representatives of the investors. And those people play a much more active role and are much closer to the comms and what's happening in the business. So that question probably requires that context, like how often and at what level should you be getting board communications versus shareholder communications? So let's assume it's shareholder, just because that's the common denominator of all the investors. I mean, there's the legal obligation of quarterly. But I generally find that it shifts over time. The newer the investment, the more frequent the communication. And that can peel back as the operator is getting comfortable in the seat and is a little more familiar with what's going on and consistent in their projections and their performance. So it can be as frequently as like monthly when they're just in the seat, peeling back to quarterly within the sort of 6 to 18 month range. And then there's a light update quarterly, and then sort of a big annual review out in the years like 3, 4, 5, 6, 7. And then anything that's event driven, preparing for an exit, preparing for acquisitive M&A, preparing for, I don't know, disproportionately senior hire or something like, something that's big. Those could be ad hoc updates. When when portfolio companies underreport, there is truth in the adage that no news is good news. So like that's true for a reason. And you never want your CEO and their management team wasting time on reporting. So there's a really fine balance between like dazzling your investor group with an amazing reporting pack and great communication. You might not be spending enough time on like growing the business and creating value, right? So there's a trade-off there. It's a fine balance. But the no news is good news thing, and the I only hear from you when it's bad and I need a check, it's worth saying that it's a two-way street and it's a partnership. So how often is the investor checking in for no good reason, or just how's it going, or how you feeling, like how's it going in the seat, So I think as investors, it's unfair to sort of be like, I never hear from you, except for when it's bad. And the CEO could be in the seat saying like, when did I last hear from you since you were late for the subscription? Like, so
Thanks, Rob. Yeah.
it's a two-way street. Yeah. I don't know. Yeah. Not you. That was a generic observation. Yeah. But you know what I'm saying? Like it really is it's a partnership, a long-term partnership. And that requires, like anything in life and other walks of life, you need to communicate both ways, or it's not a fruitful relationship.
I think that's a good point to transition to Q&A, but the idea of it's a partnership, it's not an ETF, right? Where you're just like, yep, cool, I'll see it later. And there's an activeness, there's an active nature to the investment and the relationship. And fundamentally, that's something that you need to work on. It's not a set and forget. We've got a good amount of time now for Q&A. So let's start that process. I think on Pete's, stand up and ask a question.
Just curious as to how you guys look at the difference between self-funded searches and funded searches, and how you want them to behave differently or the same in terms of engaging investors in the process leading up to an acquisition.
No, actually, I haven't. Our fund invests exclusively in traditional funded search, so I could opine academically, but I don't think I'd be the most helpful.
I haven't dealt with any self-funded at this stage, but I would really like to find somebody that's female that is doing that, to be honest. And at that stage, I'd like them to reach out way earlier than when they just need money, right? So if you are self-funded and you think you're going to need equity, then you should still be talking in a similar vein to investors along that line, even if you're not asking for an initial investment.
Yeah, to build on that, I mean, just in practice, you'd want to communicate early, communicate often, and be building the relationships and the credibility and trust that's going to be required to close a deal. The challenge in a self-funded structure, of course, is that investor has no incentive to actually help you, or perhaps more valuable, provide credible feedback, because you're an entirely free option, like whether you come with a good deal or not. is probably a point of indifference for that investor. So one of the biggest challenges that searchers work on deals too long because they get ambivalent feedback from their investor group. And so you can do more work than you should on something. And in a self-funded structure, you're more at risk of that because there's no skin in the game or incentive to really give you that feedback or help you out. So I'd be extra wary of that and be more solicitous of feedback, or be more assertive trying to build those feedback loops with your prospective investors.
So, Rob, you're saying, I'm going to ask a follow-up question. Sorry. That you would there could be a possibility that it would be very good for a bit of a hybrid model in between, and that might be a happy place for a self-funded.
If I were doing self-funded, I would go on the front foot to preload and pre-build who I would like my cap table to be, and be building a relationship that's as high functioning as a traditional funded search, even without the search unit having been acquired. Because unless you've done search a lot and you know what to go buy, one of the biggest benefits of having active investors in your search is you benefit from the pattern recognition of them having seen great assets acquired many times before. And if you're N equals 1 and those investors are N equals 20 or 30, you're just going to benefit from that experience into your own analysis, which is, I think, a good thing to have. So even if I was self-funded, I would want those folks that had the pattern recognition to help me out.
I think just from where we sit, I think the self-funded generally raise issues probably earlier, because in this environment, there's probably more on the line. They might have a house tied to it or significant PG or something like that. So there tends to be significantly less levers that they can pull, because their cap table isn't full of people that can help. But it tends to be quite early in the piece that they kind of have that, oh, we're in trouble. So I think in our view, they've come to us earlier. We're going, okay, we have some levers, but it's just not the traditional levers of a search fund, of being able to tap your cap table.
I'm interested to hear how much you see yourselves as part of an investor group at different stages of the journey. So to what extent are you talking with other investors and, collaborating with them, in advising the search journey?
Yeah, look, it's a great question. It's actually one of the things that really attracted me to the space. I think we are early in the whole search community here in Australia, and because of that, I think there's a real collaborative nature. Many of the investors, we've got to know each other. We'll discuss, potential searches. You look to see certain people on the cap table. You look very carefully at who's on the board when you're thinking about actually following on and buying the business. I think that's more important than people realize. And it is still this nascent community, but I've been incredibly impressed by the quality of people involved here in Australia, not only the searchers, but the investors as well. And really being part of this community has been, one of the main attractions, actually.
I can build on that. I think you do there's groupings of investors, and there's some clear positives to it. There's slipstreaming of certain bits of work, particularly like structuring and tax. All investors can fit into certain buckets, and that work is very complementary and helpful to share. The downside of it, though, can be a certain degree of like groupthink and moving in herds, where that can create, we always talk about concentration risk in either suppliers or customers at like the asset level. Searchers, unbeknownst to them, can often have cap table concentration risk if there is that groupthink or those implicit groupings that you're not aware of. So the community is very collaborative. To put it in context, like in our first fund, we were in 74 search funds and in 32 countries, I think, and shared a commonality of cap tables with 6 or 8 investors to the tune of 12 or 15 search funds across, say like Western Europe or North America. So that can give you a sense, like when you're a searcher and you only know your one cap table, there's a higher level multi-round game being played by some of your investors that don't always distort behaviors at the individual opportunity level, but they can. And it's something to be eyes open about and aware. But generally, if it's a great deal and you're a great searcher and you've done a great search, like none of those problems are going to manifest. But I think that there's elements of, I think the most important thing to be mindful of is understanding what those investor groups might like in terms of what good looks like. What industries are they interested in? What types of assets do they cluster around? What type of value creation thesis do they tend to work on in their portfolio? Like, are they growth oriented? Are they leverage oriented? Do they like tech-enabled services, bricks and mortar businesses? Knowing that stuff before, as you raise capital and you understand who your investor group is, there's no right and wrong way of doing it. There's lots of great ways to find great deals and create value in search, but it's actually about a fit with what you want to do, what you want to buy, and what you want to run, right? Because if you're like bricks and mortar, truck and driver kind of business, and unbeknownst to you, all your investors are like long on SaaS, you're embedding some of that dislocation or almost concentration risk come closing time because you found something you love that none of them are interested in, right? And if they're all, particularly if they're in a cluster that you don't want a part of, you've kind of pre-baked a higher risk of failure into your search without knowing it. So it's a great thing to be aware of. It's a good question.
In your case, search. What are the two questions? What questions do you want them to ask you, and what questions do you not want them to ask?
At what stage? Sorry. Okay, well, there's some good articles about that on. If you're familiar with AJ Wasserstein, the Yale professor that teaches search funds at Yale, he wrote a really good white paper on questions searchers and investors should ask each other in a first meeting. So he's got a great bio. His Yale bio page is replete with great white papers on cool topics like that. So that would be a long list of questions. I don't know. What do you guys think?
From my perspective, not so much questions, but I'm looking for alignment in culturally aligned. I'm not talking about where they're from. I'm talking that how they speak, how they talk about people, what they're looking to achieve, what their drivers are, aligns with myself. So that's really what I'm looking for. It's kind of like a job interview, right? So that's the baseline for me, which may be very different to institutional investors and all of that sort, because I want to work with people I like. So
Yeah, I think all investing actually comes down to three things that I look for. It doesn't matter if it's a huge company or a search business. You're looking for people who are honest, hardworking, and intelligent. And if you get all three, it tends to work out.
I might only add that I would echo both of those things. I would only add and prepared.
As a prospective searcher, what is the optimal runway to engage with you as investors?
Well, from my perspective earlier, I don't do this as a full-time job. So if I don't answer your email, there's probably a good reason for it. And it's not because I don't like you, it's just that I'm busy. But also, I invest in a range of things. So I may have capital tied up, right? So if you come to me and want money in 6 weeks' time, I might not have it available for you in the levels that I would like to commit. As this is becoming more mature, probably all of the investors in here are investing in multiple searches, which means that at some point they're going to want more money if they're searching. And so then I need to program that and plan it. So earlier the better. Make those connections, see if you align, because just because you've spoken to an investor doesn't mean that they're going to give you money when they say they may, because something else might pop up.
I might add it depends where you are in your own preparation process. So if you're in an information seeking and sort of market sounding stage and you're still learning, First, I'd self-declare that, and then that can be any time, like as soon as you've started your learning process, and almost pre-signal it, like, hey, I'm reaching out to establish a relationship and learn more. I'm not fundraising. We wear two very different hats. Like when you're pressing play and you're pitching, we're going to look at it differently than sharing knowledge and helping you prepare. And then it's just your process and like your life, and like, if you're leaving a job or you're moving cities, or that's just going to be like your own timeline. And it can be, in the US where it's very high velocity, someone can put up their hand to raise a search fund and 10 days later be oversubscribed. And but that's misleading, because those people have usually been preloading investor relationships for more than 2 years. So when they press play to raise, it's not actually 10 days, it's more like 3 or 4 years of pre-prep. And then, the newer the country, the more nascent the local investor community, the longer it's going to take.
Just think about building capacity, withstand, rather than always the reactive response to the proactive life. Interested in investors involved in that.
I'm not sure around the investor role in particular, because as active investors, and if they're sitting on the board and things like that, they should be actively doing that and speaking to them, like what Rob spoke about, Um, but in regards to getting yourself ready to deal with that resilience and knowing that things may come, there's a couple of big things, which is making sure that you're looking after yourself mentally and physically, and that you've got support network that is around you as a person. Probably no different to if you were CEO or whatever of a different business, but it's not just all about the business, right? So you need to look at work-life balance, because if you are just solely doing the business, you are going to burn out. So, and you will not have capacity, and you will not have built that resilience. So it's about looking after yourself.
Yeah, I think it's a bit like running a fund, which I did for many years. When it's not going well, it's a really hard job, and you've just got to keep trudging through the mud day after day. There's a negative number next to your name, but if you trust the process and trust the people around you, you will get through it. But you can't necessarily work your way out of it. So, as you say, burning yourself out, staying in the office till 11 at night every day, that's not going to help. You've actually got to trust your process, and as you say, look after yourself on the journey.
One more question, and then I've got a final question to close up. I'll ask my final. Yep.
Oh, wait. Yeah. Jay.
Good question, Jake. It's rarely, in our experience, it's rarely at odds. It's pretty aligned. We're on to running with analogies. I'll give you another one. We think of our work as one of conducting an orchestra, and our investors are in the audience. So if things are going well, we actually have our back to them and are focused on making great music with incredible artists and musicians, right? That's the searchers and the entrepreneurs. And that's it, right? Like, they paid to come watch, and if it's beautiful music, all you do is you walk in at the beginning and you say, welcome, and it's nice to have you here, and then turn around and do your thing. And hopefully it's awesome and you get a standing ovation at the end. I mean, I think where it becomes more problematic is when, people are playing the wrong stuff and missing notes, and then you might have to turn around and have a few chats. But luckily we're not, we discharge our own reporting obligations and some of the same principles as like being transparent and letting people know what's going on. And we do that on our sort of statutory like cadence. We chat to any of our investors that want to know more at any given time, like one to one, and allow sort of double clicks into what's going on. The only thing actually that's into for any governance nerds in the room, who one of my partners is a total governance nerd, so he makes this point all the time. We actually can be in a slightly conflicted position when we're a director of a portfolio company and very close to the action, but that company may not have disclosed to its shareholder group what's going on in the company. And some of our investors in our fund co-invest directly, so they can be in a shareholder seat in the portfolio company when we're a director. And if they got information through our fund disclosures that were not what they knew directly from the CEO, that's problematic. So that's one piece that we're very careful about, the information flow internally. We have our own sort of checks and balances on what information flows up the chain. But that's, like I said, it's a bit of a double click for governance nerds, but
Last question. So great thing about the ETA space is there is a place for every size of investor. You've got millions or tens of thousands. There is actually a place and an opportunity depending on deal size. What brings you A, joy, and B, encouragement out of investing in this nascent asset class? Charlie, you can start.
I think I already alluded to it. I think for me, actually visiting the businesses and speaking to the entrepreneurs who are down in the weeds, and hopefully using some of my experience, having seen lots of companies rise and fall over the years, I just love that process. I find the variety of businesses just absolutely fascinating. And I love the fact we're all on the same team. I'm not being sold the business in every meeting I have.
What brings me joy is I don't have to run it. Like, let's be realistic. So, yeah, I've been there, done that. Don't need to do it again. But on a more serious note is I really like the network and the people that is in the search fund community. And we were speaking about it last night, over a wine. I'm not sure where you get that, right? Where you've got investors and operators and bank managers and all of that sort of things in the same room going, how amazing is this? So I think that's the joy. It's the extended network. And then the secondary thing is seeing these very entrepreneurial, intelligent, highly driven people get an opportunity to run a family business or a SME that they might not necessarily have even considered when they were going through business school or other schooling or business operations. I find that's really interesting. Those people, knowing those people.
agree. I would build on that. I think for me, the number one thing that I love about this is the self-actualization of the searcher, and one layer down, often their management team, as they grow the business and figure out how to be a great leader and operator. And yeah, you can often be on the journey of someone who's late 20s, early 30s, never run anything before, and 6 or 7 years later, all of a sudden they're just a sort of badass operator, CEO, and it's just a very cool thing to experience and observe and nudge. And then on another level, our work, we take search funds into so many new markets. I love doing hard things in new places, and even 4 or 5 years ago, Australia was one of those newer places, and now it's taking root and flourishing, and that's a cool thing to experience in different places as well. So I love playing a small part in that as well.
Awesome. Thank you very much for your insights.